whoever has the gold has power and control. When the public loses all confidence in the currency and they stop using it, which is what happens, right, in hyperinflation, then they will back the currency with gold. Now, it'll be a small component. I'm not saying it's going to be at 100%, but they're going to have to do something to get the public confidence again. And historically, 100% of the time that they use gold.
Right.
And then they'll start to take it out again. But at least you'll have it in there for a minute. So I don't want people to be fooled, because a lot of people will think, okay, we're inside a crisis, we're in deep doo-doo. And now look at this, the government has brought out CBDCs and they'll say this'll fix everything. That's not going to be the end of the hyperinflation and the end of this wealth transfer and this wealth destruction that's going on. It won't be, and you mark my words on this, because I'm 100% certain about this. We will not be at the end of this piece until there is a component of gold in the new currency. That's when you and I will know, all right, this garbage is over. I've been watching Bitcoin for a very, very long time, and they do have 16%, and you might know this better, but I think if I remember correctly, 16% of American adults have used some form of cryptocurrency in some way. So they have a level of adoption way higher than the level of adoption on gold.
Yeah.
I'm just not really sure who's going to survive this mess. I would prefer Bitcoin over cryptocurrencies. Over CBDCs for sure. So in order to control inflation, they have to raise the interest rate above the rate of inflation. So even at 5%, if we're at 7% inflation, not going to do it, right? So they actually have to go above the rate of inflation. And what they're trying to do is bring at least the inflation read down as they're slowly raising those rates. And if they can pull it off, this is the soft landing, which has never been accomplished before in the history of mankind. But hey, these guys have gotten it so right. I'm sure they're going to be able to do it this time. I'm being completely facetious.
I know.
Okay. So what they're seeing is they're trying to get inflation down to about 3.5%, and then by raising the rates half a basis, 50 basis points, et cetera, be it maybe about 4.5. So they're trying to push inflation below their interest rates so that they can say that they tamed it there's got to be lots of job loss, because while they didn't have any problem with CEOs making 1,000 times what the employees were in the 70s, it was 20 to 1. Now it's like 1,000 to 1. That wasn't inflationary. The whole inflation scenario is about repaying that debt with dollars that are cheaper and cheaper, except that the US government cannot repay the debt, because then that's tightening. It's just like the central bank, selling off or allowing to mature off of their balance sheet. That's tightening, right? They don't want tightening. They want expansive credit. But the real problem is that there is officially virtually no purchasing power left in the currency. That's why they have to go to negative rates. That's why they have to go to a CBDC, because it's, raising the rates, lowering the rates. The reality is there's nothing left to work with. They have to attack your principal. You hear inflation, but how often do you ever hear from any of the talking heads about the loss of purchasing power? And, my favorite, if you said, okay, Lynette, you only have one graph that you can work with. it would absolutely be the Federal Reserve's purchasing power chart, because it shows you everything that's really happening. Okay. And even that has been, mushed
Manipulated.
around.
Yeah, manipulated.
100%. So, but it's at least more accurate. And so the tool that the central banks have used, which are interest rates, to regulate the rate and speed of that inflation, we've been anchored at zero since 2008. And so is it really, and part of that, which it's called financial repression, but part of that, when they lower the interest rates all the way down, in theory, corporations that have more expensive debt would then go ahead and trade out that more expensive debt for cheaper debt. So whether it's the US government or it's a corporation or even an individual, with variable rate mortgages, we see what that's like. And there's a big problem in England and in Europe because they don't have 30-year fixed mortgages like we do here. They have short term. So when you have short-term debt and you're having to roll that over into a higher interest rate environment, that means your payments are going up. And if your payments are going up at the same time that everything else is also costing you more and more and more, and your income isn't going up at that same level, we have a problem. The Bank for International Settlements just came out with a report on, derivatives that are
trading.
Yes, and foreign exchange and how
It's
they're
insane.
It's just, and it's hidden, right? It's hidden. So nobody really knows the truth of what's at risk. But what we do know is it's grown exponentially, and using all of this funny accounting to make things look smaller when in reality, all it's doing is hiding more and more risk and everything off balance sheet. So, but why we're going to not have any more inflation is because once we're in a CBDC and that is fully in their control, and they say they can constantly tweak it, we will be dealing with deflation, the opposite side of the coin. Because they're going to be taking and attacking your principal. That's deflation. If they can make inflation appear lower, then maybe they'll go to 25 basis points. But I know that they have to get it above the rate of inflation. And the reality is they have to get it above the true rate of inflation. But frankly, even if they do, it doesn't matter. We're at the end of this currency's life cycle.